Good day, ladies and gentlemen, and welcome to our interesting class on robotics trading, quant trading, algorithmic trading. It's a way that you can terminate your emotions in the marketplace. Now, I would appreciate it greatly if you could click on the subscribe button down below or the bell icon. I promise you, we're not going to bother you. You'll just get notified whenever I upload a new class. So please, subscribers are very important to me, and I'd appreciate it if you could do that. Now, why might you want to use algo or robotic trading? Now, we all know that there's lots and lots and lots of stuff on the internet. We know there's lots of so-called brands and gurus out there and all this other stuff that'll let you do robotic trading. Now, don't misunderstand me. Robotic trading is great. Using somebody else's pre-recorded or pre-set up robotic trading, or clicking on some brand because they offer you robotic trading and it's set up and you have no control over it, it's just like somebody else giving somebody else your money and saying, make me rich. Not going to happen. But algorithmic or quantitative trading involves creating end-to-end computational trading systems. Yeah, that's quite complicated. End to end. It's a lot of stuff that goes involved, because we take the emotion out of trading, but every possibility has to have a rule for that robot. Okay. Once you have it all set, it's incredibly great. Okay. But you need to be able to predict or foresee any type of happening in the market, so the robot or the robotic trading app or the scanner knows what to do. Now, statistical rules to trade financial assets in a fully automated manner, often at frequencies far in excess of human capability. Creating consistently profitable algorithmic trading strategies requires a mix of skills, including statistics, programming, and risk management. Well, don't run away yet. Okay, it is that complicated. But when you see somebody that's offering you something that complicated for free, you got to think twice about it. Now, there's many ways, and we're going to talk about, to get robotic traders that are customizable, where they've got everything built in, but then you have the ability to adjust it and set it to your strategy. Okay, a computer program based on a set of trading signals that helps determine whether to buy or sell an asset at any time. Robots are designed to remove the psychological element of trading, which can be detrimental. Automated trading robots are available for traders to purchase over the internet. Notice the word I used. Purchase. Free things are not worthwhile. Purchase things are good. And there's cheap robots, and there's expensive robots. There's middle of the road robots. But just because somebody's charging you a lot doesn't mean it's better. It's important to note that there are no such things as the holy grail of trading systems, whether automated or not. If the automated system being sold was a perfect moneymaker, the seller would not want to share it. This is why big financial firms keep their black box trading programs under lock and key. They won't even tell any of their clients exactly what it does, how it works, when it'll make a trade. Automated day trading systems and signals are available to purchase over the internet. Now remember, purchase. Trading systems can be either manual or automated. Now, you've seen lots of people out there that are offering follow my trading system, learn my trading system. And the fact is, in a 15-minute video or a 10-page book, you couldn't get all the little innuendos, all the ins and outs. This is just somebody pushing something out in the internet. Like, I teach classes, and you can see on my videos, lots of classes, my triangle trading strategy, my indecision candle strategy. Okay, now I try to give you the basis of turning this into your own strategy, to give you the highlights, to give you the idea, but then you've got to spend the time testing it, writing all the rules, understanding it, because it's also completely different, each one of these strategies, depending on assets, markets, times of markets, and everything else. And I know them because I've been trading them for years. And my rules are my rules. But I couldn't write them down. I couldn't, because over the years I've tweaked these hundreds of times over. And unfortunately, I don't have some big journal that says, and maybe I should have, every rule that's in there. Now, both automated and manual day trading systems and signals are often available for purchase. It's important to note that there is no such thing as the Holy Grail. Okay? We've said that before. Okay, now, before we go on, I am not promoting any trading system. I am not part of any brand or website, and I'm not selling anything to anybody. And in this class is not sponsored by anybody. Okay, so the information I give you or share with you is up to your choice, and they're just things that I found that might help your search narrow down of trying to find what you want. Now, any trader can use trading robots and indicators in their day-to-day trading. These are special applications for trading programs. Now remember, robots or scanners, are all computer rules and regulations. Now, I have lots of scanners. I have lots of robotic EAs, expert advisors, but they don't tell me. They're not a trading system. I have bits and pieces. I have a robot that will scan the markets and tell me when a particular pattern is appearing. You can use AutoChartist, which doesn't tell you to trade, doesn't tell you an entry point, is not part of a brand, but it tells you when something is happening because it's scanning the market for particular formations or particular events that are written into this program. But then you have robotic trading that does and makes the entire trade from beginning to end. Now, there are special applications for trading platforms, and their use does not require any specific knowledge or programming skill. You can download an application to buy or rent one of them from the market or order one via a freelancer. Finally, if you are not always looking for a simple solution, you can develop a custom robot or indicator by yourself. Now, there is a free source code library of robots and indicators which is built directly into some platforms. Okay. MetaTrader 4 is a good example. Now, MetaTrader 4 is a platform. It's not a brand. Well, it's MetaQuotes, but they are a service provider for brands. But they have lots of trading systems and scanners that you can add on automatically to their platform and then customize them or use them as you wish. Okay, but there's libraries that have all of this stuff pre-written that you can adjust and work from. Now, if you just go on the internet, you can find whole selections of expert advisors. But finding which one is perfect for you is a different story. Now you can see some of these are just specific indicators. Others are trading systems. Okay. Others have ability to modify them. So you can notice from Samurai EA, that's $49. But Smart Investor is $1,250. Why the price difference? I don't know. It's one worth having. Another one is just trailing stops. It's a simple robot that will set up your stop losses and move them to trailing stops on a basic formula, because trailing stops aren't complicated, but they're time consuming. Okay, that's only $19. You have Elliott Wave Indicator. You have lots to buy, and you can launch these applications in minutes. So when you're thinking algo, you got to think initiation price, quantity, order type, profit targets, trailing stops, exit price, all of these rules. So before you decide, you need to understand. Now you can download a complete trading system. You can customize trading robots and systems. You can build your own. You can use one for your platform or download programming and code for each indicator you want and design your system around them. So say you decide I want to use Fibonacci, Bollinger Bands, and stochastics. Okay? You can download all the code for those. But then you have to do the rules. When Fibonacci falls below 50 and is relatively close to 68.2, or bounces off 68.2, and we didn't get a rejection from the band and it's above the moving average of the Bollinger Band, and my stochastics is not in overbought yet, enter a trade. But then how much you can enter trade, what asset you can enter trade for, how much quantity you can do, how you can put your stop loss, set your take profit, or notify me that there's a trading opportunity available. You can do all of those. So what is algorithmic trading and what is required to get it started? Now, before you freak out, okay, most of us are not computer geniuses, programming geniuses, software geniuses. I couldn't do any of this stuff if I had to. But if you look carefully, there's many of these robotic strategies or trading systems today that let you fully customize them by checking off boxes and checking off. Like when you go on your charting service, you can go on your charts and decide whether you want a 5-minute chart, 10-minute chart, 20-minute chart, what indicators you want, when to notify if this indicator does that, or what levels is it. Well, here the whole robot is built, but then you decide by checking off boxes what you want, what you want it to do when each of these things happen. Okay. And that makes it really easy and allows you to customize without doing any programming. So there's lots and lots of choices out there. But an algorithm is a specific set of clearly defined instructions aimed to carry out a task or process. Algorithmic trading, or automated trading, or black box trading, or simply algo trading is a process of using computer programs to follow a defined set of instructions for placing a trade in order to generate profits at a speed and frequency that is impossible for a human trader. So you have algo trading, which is almost high frequency trading, and then you have robotic trading. Robotic trading, you can just tell it to do one trade a day. It doesn't have to, it's not looking for high frequency, it's not looking to react faster than a human being. It's looking for when specific items happen in the market. Now, quantitative trading isn't accessible solely to institutional trades. Retail traders can get involved as well. While programming skills are recommended if you want to produce algorithms, even those that are always required. Programs and services are available that write the programming code for a strategy based on inputs you provide. It is time consuming, it is difficult. There's lots of people out there who do this, and when you're finished, they go on the internet and try to sell them to recover their time and effort and money. And they'll be selling Barry's algorithmic system, or Barry's Fibonacci rules, or Barry's Fibonacci robot. And you can sell them through Apple and Google apps. While a well-programmed algorithm can run on its own, some human oversight is always recommended, especially when you're starting it out. But I never let any robot make a trade for me. Robots are feeding me information. Like I said, I use robots and scanners to find perfect situations for me to notify me that something's happened. Also notify me that I might want to be leaving a trade. I might use it to move my trailing stops fairly regularly. Okay. But I don't let it make my decisions. Now, all quantitative trading processes begin with an initial period of research. This research process encompasses finding a strategy, seeing whether the strategy fits into the portfolio of other strategies you may be running, obtain any data. Now, the fact is, you can have 20 completely different robotic trading strategies, and you could actually use 3 different robotic trading strategies, and when the 3 of them give you the same trade, make that trade. There's many ways you can use this. You have to be smart. Contrary to popular belief, it's actually quite straightforward to find profitable trades through various public sources. Academics regularly publish theoretical trading results. Quantitative finance blogs will discuss strategy in detail. Trade journals will outline some of the strategies employed by funds. You might question why individuals and firms are key to discuss their profitable strategies. That's human nature, isn't it? Now, many of the strategies you look at will fall into categories of mean reversion or trend following or momentum. A mean reversion strategy is one that attempts to employ the fact that a long-term mean or a price series or a trend exists, and then a short-term deviation from this mean will eventually revert. A momentum strategy attempts to exploit both investor psychology and a big fund structure by hitching a ride on the market trend. Now, another hugely important aspect of quantitative trading is the frequency of trading strategies, low frequency or high frequencies. And then ultimately it comes to backtesting. Testing. Okay, you can use a demo platform and keep testing out your strategies, but that's forward thinking, and there's only so many tests you can run moving forward. So backtesting uses specific, not trading platforms, but historic data analytic platforms that allow you to put your strategy in with your robot, and it will run it back. Say if you decide you want to test this for gold, and you're looking to trade only gold in a CFD format and only gold for August, and dump your thing in, it'll go back over all historically, back as far as you want to go, and test it. And every time this thing happened in the past, would your robot have predicted it correctly? So once a strategy has been defined, it is necessary to obtain the historical data through which to carry out testing and perhaps refinement. There are a significant number of data vendors across all asset classes. Their costs, costs. Anything worthwhile costs you money. Their costs generally scale with the quality, depth, and timeliness of the data. The traditional starting point for quant traders, at least in the retail, is to use the free data set from like Yahoo Finance. I don't dwell on providers too much here. Rather, I would like to concentrate on the general issue when dealing with historical data sets. Now, again, I'll remind you to subscribe. But I found one tool out there that is absolutely incredible. And again, I'm using it. I'm not selling it. They don't even know I exist. Okay. But after searching many, is a simple like called QuantShare. And you can dump your strategy into QuantShare, and it'll backtest it and tell you, you know what? It worked well, failed. And then you can go back and analyze it and fix each of the times it failed and improve your success ratios, and go back and backtest it again and backtest it again. And you can set it all up. And this is just one that I found after searching for a long time. But it gives you 20 tools, including charting, backtesting, optimizing, composite comparative sites, everything you need. So QuantShare is a desktop application that allows traders to monitor and analyze the markets. You can display charts and add indicators, create watch lists. You can build your whole robot within QuantShare. Okay. But it's a little bit of a time-consuming thing. Trading isn't easy and isn't fast. Algorithmic trading isn't a set and forget endeavor that makes you rich overnight. In fact, quantitative trading can be just as much work as trading manually. If you choose to create an algorithm, be aware of how time, financial, and market constraints may affect your strategy, and plan accordingly. So you can turn a current strategy into a rule-based one, which can be more easily programmed, or select a quantitative method that has already been tested and researched. Then run your own testing phase using historic and current data. If that checks out, then run the algorithm with real money under a watchful eye. Adjust it if required, but otherwise let it do its job. So what does robotic trading do? It makes you efficient. It's constantly evolving. It's intuitive. It's a great tool. It has artificial intelligence, and it can help predict and lead you into profitable trades. But again, making money or making profit is work. Okay, don't buy some pre-made scanner or robot and put your money in. Okay? And don't buy one that you cannot customize and personalize. Okay? But find one that fits your ever-evolving trading. Start out slowly, and don't start wasting your money in. Trade it, test it, adjust it, make it yours, And if you got the computer savvy, write your own, and then go in the market and use it and sell it also. But robotic trading and algorithmic trading and quantitative trading is a great way to trade because it takes the emotions out of the market, can see and understand and calculate the markets faster than you are, and does exactly as you command it to do. So think about customizing your own robot and improve your trading. Thank you very much for joining us, and have a great trading day. Bye now.